European natural gas prices surged to another record high, but despite that, inventories are still at the lowest for this time of the year in more than a decade. Rebuilding these inventories is challenging as Russian pipeline flows remain weak, LNG cargoes head to Asia to meet soaring demand there, and supplies remain curbed at a number of producers around the world. All this could be setting up Europe for a winter gas crisis. Joining me to discuss this is Samer Moses, manager at Global LNG Analytics from S&P Global Platts. Samer, thank you for taking the time and being with us on the show. Let's start with a quick high-level recap of why are we where we at today in Europe? Why are European gas inventories low as we're closing the summer season?
Thanks, Nasser. Great to speak with you again. The story of market tightness really starts a year ago. If we take 12 months back in time and take a look at where the markets were at, we were in a very oversupplied position. But then we had the 1-2 punch of a cold winter in Asia amid very low storage stocks in the region. That drew all global LNG supply into Asia, drawing down European stocks. That was followed directly by a very extended period of cold weather in Europe. If you remember, here in London, I still had my heating on as long as May. And that really kept gas demand strong beyond what's normal. Again, that reduces the storage level. After that, we had a strong uptick in economic activity and power demand in China and broad parts of Asia because of economic activity driving gas demand. And then we also had weather causing stronger power demand, low hydro stocks, that all increased LNG demand, pulling gas out of Europe. This extended the period in which we had lower than historical average flows into Europe of LNG, and that has drawn down storage stocks. Finally, what's really happening now is it's become a story about supply. We have outages across the global LNG market, or constraints, infrastructure constraints and upstream constraints. And then in Europe itself, there's a lot of questions about how much Russia is going to flow and how much it has been flowing and some of those issues therein. And that's really driving tightness in the market. And it's going to persist for the coming period.
Samer, can Nord Stream 2 pipeline open just in time to avert a winter gas crunch in Europe? And are the Russians ready for this?
Russian pipeline supply into Europe really is the determining factor right now around what the marginal cost of supply is globally. What we've had in our minds persistently is that the spare production capacity has sat in Russia, right? Everybody's always assumed that Russia could put gas into Europe if it needed to. Nord Stream 2 is a big part of that. We do expect at S&P Global Platts that Nord Stream 2 will come online before the end of the year in Q4 and start ramping slowly in Q4, that is, and it will be there in play. But the reality is the question has shifted a bit from that. Nord Stream 2 is going to start, but the question is, does Russia actually have the gas? And this brings forth a huge question around something we'd always assumed to be given. That is Russian supply availability. We've seen Russia repeatedly book lower than expected for space to flow gas into Europe. This happened again this week. There has been infrastructure issues in Russia recently. There has been a fire at a key processing plant, just taken some production capacity offline. And this has really highlighted to the market that, you think Russia is always going to be there, it might not be able to. That does inject a lot of bullish sentiment. So the question really is not, will Nord Stream 2 be there? It'll be there. The question is, will Russia have the gas? How much of the gas will it flow? And at what price? And these questions, while they will be answered in time, the uncertainty injects risk premium into the market. And that's why you see winter prices at record highs right now in Europe.
Samer, could the US LNG be Europe's savior this time around?
US LNG is supposed to be everybody's savior. It's the driving force to meet Asian demand this summer, this winter, in the coming couple of years. It's the only place until 2024, really, that we see material, significant growth in LNG production capacity. And in that sense, while it will play a key role in balancing global markets, it can't balance both completely, right? And this is setting us up for the position where where Asia and Europe are competing for supply. And yes, while that they're competing for the flexible US supply. But at the moment, a lot of that supply is pointed to Asia because that's where the premium sits. And the question then becomes, what about other LNG producers? What can they do for us? And that's a question that we look at very closely at Platts Analytics.
why haven't mid-level LNG producers kept up with the demand that we have been seeing lately? And is there a chance they get their act together and start increasing their liquefaction utilization rates in response to the price rises? And who do you think, Samer, is mostly primed to be able to do that, in your opinion?
Well, markets right now are really incentivizing all available LNG capacity to be used. The question really isn't about can or do they want to. I think all LNG producers want to push as hard as they can, and in fact, they are. The question is, are they even able to? In core countries like Nigeria, Trinidad, Peru, Norway, we're seeing significant infrastructure issues, right? So plants are down in Norway, plants are down in Peru, or upstream issues. You know, we have a lot of upstream production issues in Nigeria, in Trinidad and Tobago. This is limiting the ability for these countries to actually put supply into the market. And the way that we see it, all available, capable production that's able to be used is being used right now. And we think that's going to be the name of the game through the end of the year, really through the next season. And in that reality, there isn't much spare capacity to go around. And that, again, underpins this idea that Russia was the key one people were watching, and now there's questions there. And two, that if there is not a lot of responsiveness from the LNG supply side, then if something does happen, like a very cold winter or unforeseen outages at nuclear facilities or something of that nature, gas prices could really go through the roof, an even higher roof than they are at right now.
Asian LNG demand has been robust. Spot prices there are at $10 per million BTU. Given that more capacity will only be coming online in the mid-2020s with construction delayed due to COVID restrictions, does that mean higher prices for longer?
Asian demand really has been it's strong. Strong is an understatement, right? Right now, you know, we talk a lot about China, but at the moment, it's South Korea really driving that import growth in Asia. You know, that's on the back of weather in South Korea and the need to refill storages. And this has driven spot prices. The Platts JKM is trading at, you know, above $17 right now. It is, you know, very, very high prices. And these price levels, you know, we do expect to be in a tighter market for a period to come here. When we look at the JKM and Platts Analytics expectations for that benchmark price, we actually expect double digits more or less straight until 2024. We see a little bit dipping into the high $9 range in 23, but for all intents and purposes, we're going to be in the double digits until the next wave of new supply comes, which isn't until 24, 25, and there's risk that gets delayed even more. Key expansions in Africa, you know, we're looking at Mauritania, in Nigeria, in the U.S., of course, and in Qatar, are facing price increases, as we saw recently in Mauritania. So select delays here and there, and the risk really is that this bullish cycle extends beyond 24, beyond 25. But the thing we have to remember, LNG markets are cyclical, right? And in that sense, once we hit 25, we do see prices, you know, moving significantly lower as this large flow of new supply comes online. And the question when we think about LNG markets from a broader perspective in the longer term is, you know, is there another wave after that? Is there more supply coming online in 28, 29, 30? We have to think about, in that conversation, carbon intensity, energy transition targets. These things really matter and have brought into question people are thinking, well, do we finance more projects or not? And that's one that will be answered here shortly. And we think the most advantaged players are those that are vertically integrated, that have the ability to monitor and reduce carbon emissions across and GHG emissions across their entire value chain, and that, you know, and are doing brownfield expansions, not building from scratch. And those are a select few players.
European TTF benchmark is trading at a discount to the Asian JKM currently. What could reverse the situation, and how possible that it would?
Well, Asia is structurally short LNG. It's always going to need more LNG than it produces in the region. And because of that, it means that it takes significant events to cause JKM to fall below TTF. And we really don't see that often. What you really need to see is a complete drying up of Asian LNG demand while European demand stays firm. Now, here's the thing. At the moment, because European stocks are so low, European demand will remain firm through the coming season, but so will Asian demand. We don't see very much that could take the floor out from underneath Asian demand, and accordingly, we expect the JKM TTF spread to remain healthy, wide this coming winter. More high mid $2 range. And that's going to be because of how expensive shipping is going to get. And we're going to think that's the key component there, right? And when we're looking at shipping rates now, we're thinking about $60,000, $70,000 as the spot, but we think we're going to hit $100,000 shortly as we get into that peak winter demand.
So, Samer, in conclusion, is Europe heading into a winter gas crisis almost certainly at this point?
Well, crisis is a big term, and I think when we think about crisis, what we say is there's power outages, rolling blackouts, things of that nature, and we don't see that happening, right? We don't expect that kind of crisis in Europe or in key Asian markets in the near term here. But what we do see is extremely strong pricing with a massive upside risk. And that does mean that, seeing $20, $25 cargoes trade, seeing TTF, hold above that $12, $13 level price point for extended periods of time, or blow out on intraday, right? In any given day, trading even double that, it should not shock anybody, right? Because markets are extremely tight. And all that is to say is that markets will price to balance, and they will balance. And we don't expect to see outages of power in these markets, and in that sense, a crisis will not occur, barring massive unforeseen events.
Samer Moses from S&P Global Platts, thank you so much for taking the time being on the show.
Absolutely. Thank you, Nasser.